I started learning how to trade 7 years ago, and it took me 3 years to learn this one secret about price action that changed my trading forever. Before I learned this secret, some days it felt like every trade I would take, I would lose, and other days it felt like every trade I would take, I would win, and I didn't understand why. In today's video, I will reveal the secret I learned about price action that helped me go from an unprofitable trader to a profitable trader. This price action concept will not only increase your win rate, but it will help you only trade high quality setups. And of course, after explaining the simple price action trick, I will show you real examples of how you can implement this in your own trading to become profitable. So what's the biggest secret to price action? In my opinion, this is going to be one of the most important videos that you can watch this year, because today I'm going to talk about one of the biggest struggles that I see a lot of new traders facing. When new traders come into the market, I often hear them say, I traded so well for the last week, but lost all my profits in one day. Now, if this is you and you've said this before, you need to understand why that's happening. The biggest reason this is happening is because the market does not move the same every single day. There's really two specific ways a market can move. Number one is a trending market to the upside, and then number two is a trending market to the downside. These two specific market case scenarios for myself, because I trade the break and retest, I'm a momentum trader, these trend days are the best case scenario for myself. These are the days that I really do well in. Now, the other way the market moves is chop. This is where you don't have a clear direction, but rather you have a high and you have a low, and the market is not doing anything in between. Therefore, you're not getting continuation on your setups. Now, these are the two primary factors of how the market moves, but just because you understand that you have trend days and chop days doesn't mean that a day can't have both. Now, what does that mean? This means when a market is moving up and having a trend day, this may stop and it may just consolidate for the rest of the day. And because of this, if you enter in for a break and retest setup for a new high of day, you'll never reach high of day because now it's chopping. So how are we able to avoid these days to have the highest probability days so it doesn't feel like some days you win all the trades you take and other days you lose all the trades you take? Well, to answer that question, we need to talk about which day you believe is easier to trade. Now, we have 2 days here. This is day one right here, where we can see the market moved up in the morning and then we made this low, we made a new high, but then we can see that overall the trend is sideways. And then we have day two. Here we can see the market moved up, we made this high, we made this low, we consolidate a little bit, but we continue to slowly push up. In both of these days, which day do you think is easier to trade as a new trader? If we look at day one, as you can see here, this is the exact same day that I just showed you, but what actually happened on this day? Let's say we were trading the 5-minute opening range strategy. If you don't know what that strategy is, I talked about it in last week's video, so make sure to watch that video. But as we can see here, we got the break of the 5-minute high, we came back for the retest, we put in a strong price action candle as well, so we enter into the trade here looking for high of day, but unfortunately this trade doesn't work and this is a $500 loss. Now, for this first specific trade, you can see when we pushed up and had that retest, this was a decent setup. The market was trending at the time. However, when we took this loss, what do new traders do? They want to make the money back. And because of this, you see this second retest and consolidation. So what do you do again? You enter into the trade looking for high of day with your stop loss simply below this previous pivot level. Now, as we can see here, because it's a choppy day, remember how I said on choppy days, you most likely will not hit high of day because the market does not have the momentum or continuation to hit high of day. And therefore we can see, though this trade almost hit our profit target, it came all the way back down and we had another $1,200 loss. So now on a day that we were only supposed to lose $500, we lost $1,700. Now, because of this, as a new trader, you already lost $1,700 and therefore you want to make your money back. You're going to be a little bit more aggressive with your entries and you take this third retest off the exact same level. Now, it didn't work the first 2 times, but you think, hopefully it works this last time. And this last time it does end up working and you make $600. So you do recover some of your loss, but because you made that $600, in your head, mentally, you think it's okay to trade these type of days. In reality, what you have to understand is you just took 3 trades and ruined your psychology by taking the 3rd trade. You're still red on the day, and this 3rd trade was definitely not an A+ setup. Now, when we look at day 2, we can see that this day was a little bit more trending. And what happens on day 2? Well, if we trade the same 5-minute retest, we can see we got the retest, we had our 2R multiple, and we made $700 on the first trade. Now, let's say on day 2, like day 1, you wanted to make more money because you're a new trader. Well, guess what? This is the day where it seems like every trade you're taking, you're winning because the market is trending. When we see this high being made, we want the break and the retest of this high. We take this again with the 2R multiple, and once again, another $400 win. So out of both of those days, it is clear to see on day 2, the day we were trending, the market rewarded us, but at the same time, it was very stress-free trades compared to day 1, where we had to fight to make just $600. On day 2, we took 2 good trades, won both of them, and they were good setups. So the main thing I'm going to teach you in today's video is statistical edge. Your trading edge is designed for certain conditions. Your trading edge is not designed for all conditions. Therefore, unlike you think, it's actually better to not trade daily. Now, whenever I tell new traders don't trade daily, they will do it for a week or two, then their old habits will catch up and they want to take trades on a daily basis just because they want to be in a trade. You need to understand all those losses that you're having or those low quality trades you're having is because you're not following your statistical edge and you're not trading your strategy or setup for the conditions it's designed in, because every single strategy has certain conditions that it needs for you to have profitable trades. So why should we focus on statistical edge? We focus on edge for one specific reason. It's because we want to trade the most optimal days and have stress-free trades. The biggest thing that I go for in my trading is stress-free days, high probability trades, and trades that will pay me much more than I'm risking. That's personally what I focus on. So when we look at a calendar, we can see that we have 20 trading days per month. Now, out of these 20 trading days, do you believe that every single day we will get an A+ opportunity? No. You have to understand, out of those 20 days, you may get 9 non-optimal condition days or days that are simply choppy or have range action. Because of this, you need to understand 45% of days are not ideal for you to trade your specific setup, and only 55% of days are optimal for the highest probability trades with the best risk to reward. So when you understand this, you start to realize, why would you trade low quality days when you can trade high probability trades that pay you more and are stress free? Now, this is good to understand, but what can we do? How can we make more trading days optimal to trade? And how do we know what days are optimal to trade and what days aren't? For myself, within the first 5 to 10 minutes of market open, I know if a day will be choppy or if it will be trending. And therefore, on days that it's choppy, I'll simply not trade that day, or I can walk away and enjoy the rest of my day because I know it's a low probability day. But days that I know are optimal, I will focus more on the markets. And for myself, I feel like this is one of the biggest reasons I've seen profitability, because I can simply avoid low probability days and only trade high probability days. So on the charts, let me explain how you can identify low probability and high probability days for your own setup for stress-free trades, higher win rate trades, and higher risk to reward trades. So how are we able to identify high probability days compared to low probability days? For myself, one thing I've realized over the years is if you mark out the previous day high and the previous day low, if the opening candle of the next day, let's open this candle up right here, if it is in between the range of the opening candle high and the opening candle low for the first 5-minute candle, it will most likely be a choppy day. Now, of course, this doesn't mean that every single time this happens, it's going to be a choppy day. Some days it may also be trending, but over a long period of time, based off the data that I have gathered, if the opening candle opens up in between the high and low of the previous day, it will most likely be a choppy day. Now, this also works with the 5-minute opening range retest strategy that I talk about. So if we look at this specific day, let's play out the first 5 minutes. Here we can see the first 5 minutes. If we mark out the low and the high of the first 5 minutes, we know that the setup that I trade is the 5-minute high retest or the 5-minute low retest. Now, the problem with this setup or this day, when you have liquidity sitting at previous day high and previous day low, well, most likely what will happen is if we don't break the previous day high or if we don't break the previous day low in the first 5 minutes, what will happen is the stock will lose momentum even if it has a strong trend like we see here. So here we see a strong day since we opened at 9:30, and therefore for a newer trader, you would be very confident in taking a break and retest to the upside after this break. And therefore, you would be very confident in taking the break and retest to the upside because we have a strong trend intraday. But if you understand this price action tip, that if the first 1-minute opening candle or if the first 5-minute opening candle is in the range of the previous day high and low, most likely it will be a choppy day, and that is a day you want to avoid. So in this example here, let's keep playing out this trade and see if we can get a potential setup. So far, as we can see, we are hitting the 5-minute high, but we have not broken above. So you can already kind of see the consolidation that we have intraday because we have not broken above the previous day high. And right here, we can see that we actually just got the breakout and we got the retest back into this 5-minute opening range. Now, this break and retest intraday does look good. Why? Because we had 1, 2, 3, almost 4 touches of this previous 5-minute high. We finally broke out, which means buyers are in control, and we can see a strong price action candle here that we should enter in off of for a move to the upside. So if we were just basing this day off of intraday price action, we would enter into the trade here with our stop loss a little bit below this previous low, and we need to look for at least a 2R multiple. So if we were to enter the trade here, let's see exactly what happens. And as we can see here, we just got stopped out of this trade for about $700. But why did we get stopped out? This was a good setup. We got stopped out because even though intraday price action wise, this was a good setup, you have to understand that it was a low probability day. And when you can identify these low probability days within the first 5 to 10 minutes of market open, then you don't have to sit in front of the charts for 3 hours taking this one setup. Even though it looked good intraday, it still failed and you lost $700. So here's another example of this tip. However, this is going to be a higher probability day. Now in this example, we have the previous day high right here and we have the previous day low down here. As we can see, pre-market, we're already above the previous day high, which means that the probability of this day is much higher. Now, does this mean that the stock will continue to the upside? No, the stock could even come back down. However, because it is opening up above the previous day high, indicates to me that this is a high probability day. Now, let's play out the first 5 minutes on this trade as well to see exactly what happens. So here, as we can see, we have the first 5 minutes. So we're going to mark out the 5-minute low and we're going to mark out the 5-minute high. What we're waiting for on this day again is going to be the break and retest of the first 5-minute candle. So let's see exactly what happens. However, this time it is a higher probability day. So let's see exactly what happens. So as we can see here, this is a very similar example as the last one based off of the intraday price action, meaning from 9:30 to when the setup actually presented itself last time. This looks very similar. Intraday, we're still kind of consolidating, a little bit more choppier. However, we know that we are above the previous day high, and this is a higher probability day to trade. Because of this, we will enter into a long position here. Our stop loss here will simply be a break of this previous pivot low, and we're looking for at least a 2R multiple. So let's enter into the trade here and see exactly what happens. And as we can see here, we hit that profit target and we actually moved above it for a $1,360 gain for a very simple trade. So as you can see, though both of these setups were extremely similar with the intraday price action, because one opened above the previous day high and the other one opened in the range of the previous day high, one was a high probability day and the other one was a low probability day. Now, of course, this is for momentum trading. If you're a scalper or you're a range trader, then of course you want it to open up in between the previous day high and low. But no matter what strategy you trade, you need to understand that each strategy has its own statistical edge. edge, and you must understand what days are optimal to trade compared to days that are more low probability. So if this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to follow me on Instagram and Twitter, and I will see you guys next week with a brand new video.